When most people think about choosing a bookkeeper, they think they're deciding between good and bad, but that's not actually the decision. The real decision is, what do you want your books to do for you? Because the answer to that question changes everything about who you should be looking for. In this video, I'm going to show you the different types of bookkeepers and accountants so you know exactly what your options are, the key things to look for, and the red flags to watch out for when you're evaluating someone. And the most important questions to ask yourself before you even start looking so you find the right fit instead of just the nearest option. But before we get into all of that, I want to put this into perspective first. Think about hiring a personal trainer. Two trainers can both show up, put you through a workout, and technically do the same job. But one of them asks questions first. What are your goals? What's your history? What does your schedule actually look like? The other one just hands you a generic program they give everyone. Both are trainers, but only one of them is actually working on your specific situation. Bookkeeping works exactly the same way. The title doesn't tell you nearly as much as you think it does. And if you go into this decision without knowing what you actually want and what to look for, you could end up with someone who is technically doing the job, but not necessarily doing it in a way that works for you or your business. But one more thing before we dive in. I'm going to use the term bookkeeper, but everything here applies whether you're looking for a bookkeeper, an accountant, or someone who does both. What matters is finding the right person for what you actually need, regardless of what they call themselves. Before you start looking at who to hire, there is one step owners skip completely. And it's the reason so many end up frustrated 6 months into a relationship that seemed fine at first. You need to define what success actually looks like for your business before you talk to anyone. Because without that filter, every bookkeeper is going to seem reasonable at the beginning. The problems only show up later when reality doesn't match what you assume you are getting. So here are the questions you need to ask yourself before you start your search. Do you want regular communication with your bookkeeper, or would you prefer minimal interaction and just receive your reports? Neither answer is wrong, but they lead you to very different people. Is cost the most important factor, or is accuracy and structure more important to you? Those two things are often in tension with each other, and knowing which one you're optimizing for up front will save you a lot of frustration. Do you want someone who explains your reports and what they mean for how you run your business? Or are you fine just receiving the numbers? There's a big difference between a bookkeeper who delivers reports and one who helps you understand them. Do you want your supporting documents and receipts attached to transactions in your accounting software? Or are categorized totals enough for you? This is something a lot of owners don't think about until they need to explain something and can't. And probably the most important question of all, do you want books that are built for you to actually run your business from month to month, or do you primarily want them done correctly for tax time? Because those are two different goals, and not everyone approaches the work the same way. Here's the thing about skipping these questions. Owners who go straight to price shopping almost always end up paying more in the end. They pay once for the cheap bookkeeping, and then again when something needs to be fixed or rebuilt. And that second cost is almost always higher because problems in your books don't stay small. They compound. This is where a lot of owners are unknowingly settling, and most of them don't even realize it. Bookkeeping is not just recording transactions. That's the minimum. What it's actually supposed to produce is something useful, something that you can open up and make real decisions from. At minimum, your books should be consistent month to month, not caught up in a rush before tax time, consistent. Because consistency is what makes it possible to compare one month to the next and actually see what's happening in your business over time. You should also be able to trace any transaction back to what actually happened. If you look at a transaction in your reports and you can't tell what it is or where it came from, that's a problem. Your books should be transparent enough that the story behind the numbers is clear, and your reports should be reliable enough that you could make an important business decision based on them without questioning whether the numbers are correct. If you find yourself second guessing your own financials every time you look at them, they are not doing their job. Here's something I want to be really direct about because it comes up a lot. Your books should not exist just to file taxes. Tax filing is one use of your finances, but it should not be the only lens your bookkeeping is built around. When that's the case, the books get done once a year. They're structured in whatever way is most convenient for the tax preparer. The owner ends up with records that don't actually reflect the full financial story of their business. And speaking of that full picture, If you open your accounting software and what you see is a handful of large journal entries with no explanation and no way to trace them back to the real transactions, then your books are not built for you. They're built for whoever is doing them. A well-structured set of books lets you see individual transactions, understand what each one is, and follow the trail if you ever need to. So now that you know what you want and what your books should be doing for you, let's talk about who actually does this work, because understanding the different options is what makes this decision a lot clearer. Let's start with the independent bookkeeper. This is one person who takes on your books directly. No team behind them, just them and their processes. The upside here is that you get someone who can know your business deeply over time. The relationship tends to be more personal and flexible, and when it's a good fit, it really works well. And here's something important to know. Most bookkeepers start out as independents when they open their own business. If they have a plan to grow and build a team behind them, that's actually a fantastic thing. It means they're thinking bigger and wanting to scale what they do. The thing to be aware of is capacity. An independent bookkeeper only has so many hours, and if they're at their limit, your books might not get the attention they need. It's also worth asking up front how they handle situations when they're sick or dealing with something personal. Do they have a plan, or do your books just sit until they get back? That's an important detail. Next is the bookkeeping firm or team model. This is where you're working with a company that has a team rather than just an individual. On paper, this sounds like it should mean consistency and reliability, and sometimes it does, but not always. Here's what I want you to know from my experience. I worked at a bookkeeping firm that had a team model, and we had almost no documented processes. When I went on vacation, my clients didn't get serviced unless it was something critical like payroll or paying bills. Everything else just sat there waiting for me to come back and catch up. So having multiple people on staff does not automatically mean that your books get done when someone is out or unavailable. The other thing that varies is whether the firm actually has multiple people's hands in your account, or whether you're still kind of siloed with one person, even though the firm is larger. If it's truly a team approach with oversight built in, then yes, you get more consistency and reliability. If everyone is just doing their own thing in their own way, then you might as well be with an independent bookkeeper. When you're evaluating a firm, ask specifically how your books get handled if your main contact is unavailable. Ask whether there are documented processes. Ask who else reviews your account and when. The answers to those questions matter a lot. Next is the tax-focused accountant doing bookkeeping. This one comes up a lot, and it's worth spending a little extra time on because it's one of the most common mismatches I see. A tax professional is really good at taxes. That's their focus, their training, and where their attention goes. When they also handle bookkeeping, the work can be approached two different ways, and it's important to understand which one you're getting. Some tax professionals do bookkeeping to make tax preparation easier for themselves at the end of the year. The books get structured in whatever way is most convenient for filing a report. That's one approach. Other tax professionals do bookkeeping as a way to help their clients plan and optimize their taxes throughout the year. Those books are built with tax strategy in mind. That's a different approach, and it's actually quite valuable. The problem is figuring out which one you're actually getting. And here's something to really watch for. If your bookkeeping is being done during tax season, it's almost certainly going to get deprioritized. When tax time hits, those professionals are focused on returns, and your bookkeeping kind of gets pushed to the back, which means you probably won't see clean current financials during the heaviest tax months when you might actually want them the most. So if your tax professional is also doing your bookkeeping, it's worth asking directly. Is this being done to support tax filing or to support tax planning and strategy? And when tax season hits, does my bookkeeping still get done on schedule, or does it get delayed until after the rush? The honest answers to those questions will tell you a lot. Next is the in-house or part-time internal role. This is when you bring someone onto your team directly, whether it's full-time, part-time, or as a contractor who works inside your business. The upside is immediate access, and the person is close to your daily operations. For businesses with higher transaction volume or complexity, this can sometimes make sense, but here's what a lot of owners don't anticipate. If you bring someone in-house to handle bookkeeping, that person still has to be trained properly. And if they don't come in already knowing what needs to be done and how to do it, you now have a problem. Because here's the reality. If you as the owner don't know how bookkeeping should actually be done, You can't train someone else to do it. And if you bring in an untrained bookkeeper with no clear direction, you're setting them up to fail and setting yourself up for high turnover. People leave, you hire someone new, they're also confused, they leave too, and the cycle repeats. And every time it repeats, you lose continuity and spend money training the next person. If you go the in-house route, make sure that whoever you bring in is trained properly. And if you can't train them yourself because you don't know how, then you need to find someone who can. That might be an outside bookkeeper who trains your in-house person, or it might be an accountant who supervises the work. But someone needs to make sure the person doing the work knows what they're doing. Otherwise, you're just creating chaos and expense. Now, a note on pricing and structure. All of these options have a place depending on where you are and what you need. There's no one right answer for every business. A smaller business with lower volume might be perfectly fine with an independent bookkeeper. A larger business might absolutely need a team model or an in-house person. What matters is knowing what you need and finding the right fit for that. You don't need to understand accounting to evaluate a bookkeeper. You just need to know what to look for and what questions to ask. And the good news is that the right questions are pretty simple. How someone answers them will tell you almost everything. Ask how they close the month. This is one of the most important questions you can ask, and most owners never think to ask. A real month-end close is not just categorizing transactions and calling it done. It includes reconciling every account, reviewing the reports, and making sure everything is finalized before moving forward. If someone can't walk you through their process clearly, or if their answer is something vague, like I just go through the transactions, that's not the best sign. A bookkeeper who has a real process can explain it. One who doesn't will struggle to answer this question. Ask how they handle discrepancies. What happens when something doesn't match? When a transaction can't be identified or an account doesn't reconcile cleanly? You want to hear that they investigate, document what they find, and resolve it properly. What you don't want to hear is I make an adjustment and move on. Adjustments without explanation are how errors get buried and how books become unreliable over time. Ask what you will actually receive each month. Now, this one comes with a caveat. Some business owners genuinely just want their reports delivered, and that's it. No calls, no explanation, just the numbers in their inbox on a consistent schedule. And if that's you, that's completely fine. But if you're someone who wants more context around what your reports are showing and what it means for your business, make sure that's part of the conversation up front. Because getting a report with no explanation and no one to walk you through it puts all of the interpretation of those reports back on you. If you're not sure what you're looking at, that's not a service that's actually serving you. Ask whether they have experience in your industry. This matters more than most owners realize. Someone who understands how your type of business operates will approach your books completely differently than someone who doesn't. They'll know what to look for, how to categorize things correctly, and what your reports should be looking like, given how your business runs. It doesn't mean someone without industry experience can't do good work, but it's worth knowing what you're working with. Ask how they communicate and how often. Do they send updates proactively, or do you have to chase them down? Do they prefer email, calls, or even potentially a project management tool? What's their typical response time? These things sound small, but they matter a lot over the course of a working relationship. If communication is important to you, make sure you're clear about that up front and make sure their answer actually matches what you need. Ask whether they're forthcoming about your reports and what they mean. There's a big difference between a bookkeeper who delivers your financials and one who helps you understand them. A good bookkeeper should be able to tell you what your reports are showing and how that information is relevant to how you run your business. If you ask a question and get a vague answer or feel like information is being withheld or made more complicated than it needs to be, that's a red flag. Your numbers belong to you, and you should never feel like you need permission to understand them. Ask how they would approach your book specifically. If you're moving from a spreadsheet or starting fresh, ask how they would set up your chart of accounts and why. If you already have accounting software in place, know that a thorough review of your existing account structure is something you can request. A good bookkeeper should be able to look at what you have and tell you honestly whether it's set up in a way that's actually working for your business or whether something needs to be adjusted. And one more thing that a lot of owners don't expect going into these conversations: a good bookkeeper or accountant is going to be interviewing you as well. This is not a one-way evaluation. If the person you're talking to is asking you detailed questions about your books, your software, how things are currently being handled, and what you need going forward, that's actually a really good sign. It means they care about whether they're the right fit for your situation and not just whether they can land another client. The best working relationship starts with both sides asking the right questions. When you're evaluating a bookkeeper or accountant, one of the questions worth asking is what they do with your supporting documents. Receipts, invoices, statements. Do they attach them to transactions in your accounting software, or do they just categorize the numbers and move on? There's a difference between clean looking books and supported books. Clean looking means the numbers are there and the categories are filled in. Supported means you could actually back up what those numbers represent. Transactions have context. Documents are attached when needed. And if someone asks you 6 months from now what a specific charge was for, you can pull it up and show them exactly what happened. Most owners don't think about this until they need it, and then they really need it. Think about it this way. 2 businesses show the same expense on their books. The first one has the receipt attached, a note about what it was for, and it's categorized correctly. The second one has a journal entry labeled adjustment with nothing behind it. Both look fine on the surface, but only one of those businesses can confidently explain their numbers to a lender, a tax preparer, or anyone else who needs to understand what happened. This matters more than most people realize. When you apply for a loan, the bank wants to see that your numbers are real and traceable. When your tax preparer is working through your return, they need to be able to trust what's in the books. And if you ever transition to a new bookkeeper or accountant, they need to be able to pick up where the last person left off without having to guess what half the entries mean. And if you're ever audited, the burden of proof sits with you as the owner, not with whoever was doing your books at the time. So when you're evaluating someone, ask how they handle documentation. Do they attach receipts and reporting documents to transactions, or do they just categorize and move on? Do they keep notes when something needs explanation? Is there a clear trail that someone other than them could follow if they needed to? These are not complicated questions, but the answers tell you a lot about how serious they take the work. Now let's talk about what to watch out for, because some of these are easy to miss, especially when you don't know exactly what good bookkeeping should look like. So red flag number 1, everything is done through large entries with no explanation. If you open your accounting software and instead of seeing the actual transactions that happened in your business, you just see a few big entries with vague labels and no explanation behind them, that's worth asking about. You should be able to see what actually happened in your books, not just a summary that somebody put together. When you can't see the details, you can't really verify anything. Red flag number 2, you can't follow the trail. You should be able to look at any line in your reports and trace it back to real transactions. If you ask your bookkeeper or accountant what a specific number represents and they can't give you a clear answer, that's worth paying attention to. If they did some digging to try and get that answer for you and came up with nothing, then that's a larger issue. Red flag number 3, reports show up with no context. Now, some business owners just want their reports delivered and that's it, and there's nothing wrong with that. But if you're someone who wants to understand what your numbers are telling you and your reports are showing up every month with no explanation of what changed, what looks unusual, or what you should be paying attention to, that's a conversation worth having with whoever is doing your books. Red flag number 4, your questions get vague answers or get avoided entirely. This is a big one. If you ask a direct question about your own finances and the answer is confusing, overly technical, or just kind of like sidesteps what you actually asked, red flag. You should never feel like understanding your own numbers is somehow off limits or above your pay grade. A good bookkeeper or accountant makes things clearer, not more confusing. Red flag number 5, you feel dependent instead of informed. This is the subtlest one, but in some ways it's the most important. If the relationship has gotten to a point where you feel like you need them to just understand what's happening in your own business and you don't feel like you're actually learning anything or gaining any visibility, then the dynamic is off. The goal of good bookkeeping is to give you more clarity over time, not less. If you feel more confused now than when you started, something is wrong. So we've covered a lot of ground here. The questions to ask, the types of people doing this work, the red flags to watch out for, and what your books should actually be doing for you, and all of that matters. But after all of that, there is one thing I want you to keep in mind above everything else. Do you like them as a person? I know that sounds simple, but it's actually the thing that makes or breaks most of these working relationships. You're going to be sharing some of the most sensitive information about your business with this person. You're going to be relying on them to be honest with you when something isn't right. You're going to need to be able to ask questions without feeling judged or talked down to. And That only works if you actually trust the person and feel comfortable with how they communicate and how they show up. Technical skill matters, experience matters, processes matter. But if you sit down with someone and something feels off, if the communication style doesn't work for you, if they're not asking the right questions about your business, or if you just don't feel like they're actually listening, then no amount of credentials is going to fix that. The best working relationships in this space happen when the fit is right on both sides. And remember what we talked about earlier. A good bookkeeper or accountant is going to be evaluating whether you're the right fit for them as well. So go into these conversations as a real two-way conversation. Be honest about what you need, what's important to you, and how you'd like to work. And pay attention to whether the person across from you is doing the same. At the end of the day, the right choice is the person who has what it takes to do the work correctly and who you actually want to work with. Now you have a real framework for making this decision with intention, instead of just going with whoever is available or cheapest. But if you haven't watched this video yet, click right here, because knowing how to choose the right person only helps if you already know you're actually ready to bring someone into your business.